The office smells like carpet glue. You don't mind. You can't afford to mind. Your fund has one employee. You are 29 years old. Your fund has $400,000. Most of it is yours. You eat lunch at your desk every day. There is no cafeteria. There is no desk worth eating at. You are reading the annual report of a steel company in Ohio. Nobody else is reading it. You read the footnotes. That is where they hide the real numbers. The math is simple. The company owns factories worth 300 million. The stock market says the whole company is worth 90. That gap is your entire thesis. Companies worth more dead than alive. You ride the subway to Midtown every morning. You take the express. You read annual reports on the train. The man beside you reads the Post. You buy the journal from the same newsstand. The vendor doesn't know your name. Your list grows. 14 companies, all undervalued, all ignored. You visit the factories. You count the trucks in the parking lot. You count the smoke from the stacks. The annual report says production is down. The parking lot says otherwise. You sit outside during shift change. You count heads, 212 workers. The report says 160. Somebody is lying. You call your broker. You buy 5,000 shares. Nobody notices. You call the company's investor relations desk. They put you on hold for 20 minutes. You wait. You ask questions nobody has asked them in years. They don't have answers. That tells you everything. You have done this for 14 companies. Your notes fill 2 filing cabinets. Your broker thinks you are obsessed. You prefer the word thorough. $9.25 a share. Book value is 31. You buy more. You stay until midnight. Every night, nobody is watching. Nobody cares. You find another company, then another textile mills, shipping lines, airlines, all trading below breakup value. You cross 5% ownership, you file a 13D with the SEC. Your phone rings the next morning. The company's lawyer. He sounds nervous. You learn the second rule. When management calls you first, they're already scared. You walk into their headquarters uninvited. You own 5% of the building they're sitting in. The CEO calls you a pirate, a vulture. You take it as a compliment. He offers to buy your shares back at a premium. $14. You paid $9. You sell. Profit of $240,000 in 6 weeks. Wall Street has a word for this. You do it again and again. You buy fear. You sell relief. The fund grows. By 1982, your fund is at 12 million. You move to a bigger office. Still not the biggest. You read about a man in California. He finances takeovers with something new. High-yield bonds. You call his office. You get a meeting. The bond man speaks fast. He speaks in billions. His trading floor looks nothing like Wall Street. It is in Beverly Hills. The desks form an X. Everybody faces the center. He tells you he can raise 300 million in 48 hours. You believe him. Everybody believes him. You fly back to New York. You have a weapon now. Junk bonds turn a $12 million fund into a $300 million threat. You pick your first real target, an industrial conglomerate. 15 divisions, most losing money, 3 printing cash. You assemble a team, 2 lawyers, 2 bankers. You draw the timeline on a whiteboard. The letter goes out on a Tuesday. You offer $22 a share. The stock closed at 16. By Wednesday morning, it is on the news. You watch from your office, your name on the ticker. The board panics. They hire 3 law firms. They adopt a poison pill. They call it a shareholder rights plan. You've seen poison pills before. They're meant to scare you. They don't. You launch a proxy fight. You nominate your own board. You send letters to every shareholder. The annual meeting is in a hotel ballroom in Wilmington. You sit in the 3rd row. Management sits on stage. You stand at the microphone. You read the numbers, return on equity, down revenue growth, flat executive compensation, up 30%. The CEO stutters. The room shifts. You can feel the shareholders turning. You win the proxy vote 53%. The old board is out by midnight, faded black. You sit in the CEO's chair the next morning. His family photos are still on the credenza. You leave the photos where they are. You'll deal with them later. You never deal with them later. You learn the third rule. You never keep the whole company. You keep the parts that make money. You sell the rest. 12 divisions sold in 9 months. 4 factories closed. 6,000 employees gone. The newspapers call you a destroyer, an asset stripper. You call yourself an efficiency expert. You drive past the factory 6 months later. The parking lot is empty. The guard waves at nobody. Your driver asks if you want to stop. You say, keep going. The 3 remaining divisions generate more profit than all 15 did together. Your investors triple their money. You send investor letters quarterly. The returns speak louder than anything you could write. You have a waiting list now. Pension funds, endowments, old money, they all want in. Your fund is at 900 million. You move again. Penthouse office. You can see Central Park from your desk. 3 phone lines, 1 for lawyers, 1 for bankers. The red one is for the bond man in Beverly Hills. You have dinner with other raiders. You compare targets. You compare war stories. You never compare strategies. You share a bottle of Macallan. One of them just took a railroad. The other is eyeing a department store chain. You keep your mouth shut about your next move. Your next target is bigger, a household name, an airline. Market cap 2.3 billion. The bond man sends the commitment letter. 1.8 billion in junk bond financing. 48 hours, just like he promised. The stock jumps 40% in 1 day. Trading is halted twice. The CAC opens an inquiry. You keep buying. Your name is on every channel. You watch yourself become famous in real time. Your face is on the evening news. They use a courtroom sketch. You look better in person. Employees protest outside the headquarters. They hold signs with your name on them. You learn the 5th rule. If they're protesting, you are winning. You check the stock, up 3% on the protest coverage. Fear makes headlines. Headlines make volume. You visit your lawyers 3 times a week. They bill $400 an hour. You tell them to bill faster. Your legal bills are higher than your rent. You don't care. Legal bills mean you are in a fight. Rent means you are standing still. The company sues you, you countersue. 3 courtrooms, 2 states, 1 federal judge. The judge rules in your favor. The poison pill is struck down. The board has 60 days. They surrender on day 41. You now control an airline. You've never flown coach. Your private jet costs 11 million tax deductible. The machine makes this possible. The machine works like this. The bond man raises debt. You buy the company with the debt. You sell the pieces to repay the debt. The profit is yours. The bond man is the engine. He has raised 40 billion in 5 years. Every raider on Wall Street calls this desk. You call him on the red phone. He picks up on the first ring. Always the first ring. The junk bond market is 200 billion. It didn't exist 10 years ago. You attend charity galas. Now you sit next to senators. They ask you about the market. You ask them about regulation. The 7th rule, the machine feeds everyone. Bankers get fees, lawyers get fees, bond traders get fees, politicians get donations. The CKey files complaints, small ones, procedural. Nobody goes to prison for paperwork. Your lawyer calls them nuisance filings. You pay the fine, you keep moving. The Dow is at 2,400. It was 800 4 years ago. Everything goes up. Everybody wins. Your traders celebrate every Friday, open bar. Somebody always breaks a glass. Nobody cleans it up. You stay after they leave. You walk the empty floor. The screens still glow. You read the numbers. Nobody reads at parties. You donate a wing to a hospital. Your name goes on the wall. Brass letters, permanent. You give away 2 million a year. Your accountant says it is tax efficient. You say it is legacy. Same thing. You visit the wing once. A nurse thanks you. You don't know what to say. You leave quickly. You are on a magazine cover. They call your generation the masters of the universe. You frame it. You collect covers now. 4 magazines, different angles, same face. Yours. Your apartment has 4 bedrooms. You sleep in one. The other 3 hold art you bought at auction. A Rothko, a Basquiat, a de Kooning. You don't know art. You know things that go up in value. Your insurance company calls quarterly. The collection is worth more than some of your deals. You are running 3 hostile bids simultaneously. Total value $8.6 billion. Your fund contributes 4% of that. Leverage does the rest. You sleep 4 hours a night. Your doctor says slow down. You fire your doctor. You hire one who doesn't give advice. Congress invites you to testify, not a request. You wear your best suit. You bring your best lawyer. The senator asks if you feel guilty about the jobs. You say the companies were failing before you arrived. He asks if you are good for America. You say shareholders decide that, not senators. The room goes quiet. You walk out the front door. Reporters shove microphones at you. You say nothing. Your lawyer says no comment. You ride back to your office in silence. Your lawyer stares out the other window. Neither of you speaks for 40 minutes. Faded black. 1987. Your fund is at $2.4 billion. You have 9 active positions. The market has never been higher. You look at the chart. The line goes straight up. Nothing goes straight up forever. You know this. You pour a drink at 4 in the afternoon. You never used to drink before 6. You don't sell. Nobody sells. Selling means you don't believe. Your gut says sell. Your portfolio says hold. You listen to the portfolio. You always listen to the portfolio. Monday, October 19th, the Dow drops 508 points, 22% in one day. Your portfolio loses 400 million by lunch. You sit at your desk. You don't eat. Your secretary brings soup. You wave her away. You haven't slept in 30 hours. Your eyes burn. Your tie is on the floor somewhere. She leaves it on the credenza. It goes cold. Your lawyers want instructions. Your bankers want reassurance. Your investors want answers. You have none. You pace back and forth. 11 steps each way. You count them. Counting is all you have left. You call the red phone. Nobody answers. For the first time ever, nobody answers. The newspapers say it is the end. Your investors want out. Your bankers want collateral. Your lawyers want meetings. You sell assets to meet margin calls. The airline gone. The steel division gone. You sell what you spent years building. You stay after everyone leaves. You stare at the screens. They're off. You stare at them anyway. The market recovers slowly. Your portfolio doesn't. Some damage doesn't bounce back. Your fund is down 63% from peak. Your investors call daily. You stop picking up. Then the indictments start, not you, not yet. The bond man, the FBI walks into his trading floor in Beverly Hills. You watch it on television. The man who answered on the first ring, handcuffs, perp walk. Front page. You think about calling him. Then you remember what your lawyer said. Don't call anyone. Don't call anyone ever again. The machine breaks. Without the bond man, there are no bonds. Without bonds, there are no raids. Without raids, there is no you. The CAC comes for you next. Not criminal civil, they say you traded on inside information. Your lawyer says settle. You say fight. Your lawyer says the evidence is bad. You ask how bad. Very bad. Phone logs, trading records, timestamps that match. Your lawyer says settle again. You settle 47 million. No admission of guilt. You are banned from securities trading for 3 years. You close the fund. You return what is left to investors. 60 cents on the dollar. Some of them sue. You stand in the empty office. The carpet has marks where the desk was. The walls have outlines where the frames hung. Others go to prison, Bosky, the bond man. A dozen traders. You were lucky. Or careful, you are not sure which. Faded black. 1993. The ban expires. You are 43 years old. You open a new office. Smaller this time. You call it an investment fund, not a raid fund. The words matter now. The decade changed. Your new business card is plain white stock. Black text, no gold. You've learned what loudness costs. You answer your own phone now. No secretary, no assistants, just you and the numbers. You buy stakes in companies. You write letters to boards, polite letters. You suggest improvements. You don't threaten. They call you an activist investor. Now, not a raider. Same thing, better branding. You write polite letters now. Your lawyers used to write threats. Same outcome, longer timeline. Fewer headlines. You walk through the financial district. Nobody recognizes you. The traders are 25 years old. They don't know the 80s. You watch them trade on screens you don't fully understand. The tools changed. The math didn't. You run the same screen you ran in 1979. Book value versus price. The gap still exists. It always will. The trading floors are quiet now. No shouting, no paper, no smoke, just screens and silence. A journalist calls. He is writing a book about the 80s. He asks if you have regrets. You order coffee. He orders nothing. He leans forward. His recorder is running. You talk for 2 hours. You haven't talked about the 80s in years. It comes back faster than you expected. You can still smell the carpet glue. You can still hear the rotary phone. You remember every number, every price, every name. You tell him the companies were badly run. You tell him the shareholders deserved better. You tell him the math was right. He asks about the 6,000 jobs. You pause. You don't answer that one. You sit alone after he leaves. You stare at the empty chair. You finish your coffee. You order another. 2004. You accept a guest lecture at Wharton. The classroom is full. The students take notes. You tell them about book value, about breakup value, about the gap between what a company is worth and what the market says. A girl in the front row raises her hand. She asks how you picked your targets. Her notebook is already full. You look at her. She reminds you of someone 29 years old, small office, reading annual reports nobody else would read. Her notes have the same math book value versus market price. The gap, your gap. After class, she asks one more question. She asks where to start. You tell her to start with the annual reports, the ones nobody else reads. She nods. She walks away. She doesn't look back. You watch her disappear into the crowd. You used to be the crowd. Now you are the one standing still. You stand at the podium alone. The room is empty. The machine is gone, but the math is still the same. Somewhere downtown, a girl is reading an annual report at 2 in the morning. The company trades below book value. She picks up her phone, faded black.